CNBC calls it how the IRS is trying to nail crypto tax dodgers, saying that the tax man is coming out with new ways to subpoena crypto exchanges to find out exactly who's making money investing and trading, and saying that the infrastructure bill, which has bipartisan support in the U.S. right now, may contain new reporting requirements for crypto investors. I'm going to tell you everything that's involved and how you can respond right now. Hi, I'm Andrew Henderson. I'm the author of this book, available on Amazon, and the founder of Nomad Capitalist, where we help 7- and 8-figure entrepreneurs and investors legally go where you're treated best. And there have been a raft of articles about new crypto regulations, new reporting requirements, and even new taxes in the news recently. It's all surrounding this new infrastructure bill, which has bipartisan support. I don't pay much attention to U.S. politics, having left the country, having cut my ties, but I do see my home state of Ohio senator, Republican, out there pushing to raise a bunch of money with new taxes to shore up the roads, shore up the bridges. And in that infrastructure bill are some provisions that will increase taxes on crypto investors. I'm going to tell you what's involved and what you need to do about it. Bloomberg Wealth says crypto investors get ready for more taxes, but clearer rules, saying, sure, you might have to actually pay U.S. taxes on those crypto trades, but at least it'll be a lot easier to figure out how much you owe. As in, sure, you'll be punched out and on the ground gasping for air, but at least you'll know what hit you. A new push by Congress to require crypto brokers to report transactions to the IRS could create some unwelcome tax bills, but could clarify rules for traders and users of Bitcoin and other digital tokens, potentially strengthening the system in the long run, people in the industry say. I'd like to know who these people are. The new rules, a last-minute addition, isn't it always, to the $550 billion bipartisan infrastructure package now being considered in the U.S. Senate, would also force businesses to disclose trades of digital assets worth more than $10,000. These provisions are designed to raise $28 billion. The article talks about how crypto tax filing can create what they call huge headaches, especially for those who conduct multiple transactions a year, basically pitching this as a forced reporting standard, much like already exists for Americans who have bank accounts overseas through a mechanism called FATCA, but basically saying, hey, your life's going to be so much easier because now you're going to be able to pay your taxes. Now, here at Nomad Capitalist, I am the goody two-shoes of the offshore world, and I would not tell you as a U.S. person to sit in the United States or even be overseas because as a Bitcoin or cryptocurrency trader, your capital gains are taxable no matter where you live. I would not tell you to not pay your taxes. I would not tell you to evade anything. But what I would tell you to is go where you're treated best. And it seems increasingly, what I've been saying for many years, the U.S. is not going to be a friendly place for crypto. You may have some states that are opening up to it, but at the federal level, which is where the big rules are set, you are going to have more taxes and more reporting requirements. That's just what the United States does. They haven't changed their stripes in the recent years, and they're probably not going to change them now. Here's the article from Coindesk.com. They say, according to a draft copy of the bill shared with them, any broker that transfers any digital assets would need to file a return under a modified information reporting regime. The draft defined digital assets as any digital representation of value, because what could go wrong with that vague description? The provision also includes updating the definition of broker to reflect the realities of how digital assets are acquired and traded, the document says. Provision further makes clear that broker-to-broker reporting, it's so complicated. But they say it might raise $28 billion to pay for an infrastructure package that costs 20 times that. And so here's what is happening. The U.S. government, like many legacy brand countries, like many high-tax, tax-and-spend countries that once had something pretty good going on, once were good for business, once were good for investors, once were at the forefront of innovation, they have realized, listen, we don't want this thing that can get in our way to be happening here, so we're going to tax and regulate it. That's what they know how to do. Now, obviously, there's still some innovation in the U.S. I'm not going to sit here and say there's no such thing as innovation. But the U.S., I remember a couple years ago being in Hong Kong and talking to folks who said, the government really wants businesses to come here. They are really pushing for new companies to come here. But it's difficult for people who don't know if they have a business there, how to bank on a global level. It's difficult for them to bank because Hong Kong banks don't want to deal with anyone. The banks don't want the risk. The banks are flush with cash. They have plenty of money. They're conservative. They're not looking to bring in more money and throw it onto risky stuff. So they don't really need your money. They don't want to take the risk of some guy coming and starting a new business in Hong Kong. And there's that thing where the government wants it, but the banks don't. Someone on the ground doesn't. In this case, it may be the opposite. There may be people or companies in the U.S. that want innovation or doing innovative things, but the government, they may tolerate that. Now they're coming after those companies in the tech space that they don't believe are paying enough taxes. But ultimately, if it gets in their way, they don't like it. Now, the U.S. is effectively the only country in the world that taxes its citizens no matter where they live. And while there are ways for business owners to greatly reduce the amount of tax they pay through foreign corporations, the foreign earned income exclusion, proper structuring, if you are trading crypto, not as a business, just a guy or a girl trading crypto, holding crypto, you're not going to get a lot of relief. You can certainly go to Puerto Rico and you can deal with that. There are pros and cons to that. But you are still going to be the citizen of a country that basically, whenever they want to raise money for something, they're going to you. And there's a couple things that this means. Number one, we've been talking recently about how Elizabeth Warren and others are basically coming out as clearly as they can as politicians and saying, if you're wealthy, you're a cheat. That's basically what they're saying, is that, hey, pretty much everyone who's wealthy must be cheating on their taxes. Now, there are some crypto people who are cheating on their taxes. But here's what we saw in our world, the Nomad Capitalist world, when they brought out FATCA. You had a lot of people living around the world, about 9 million American expats who, many of whom have jobs or have businesses, and suddenly couldn't get a mortgage for their house, couldn't get a savings account to save. Their kids couldn't get a savings account to save money, couldn't get a checking account. They had their accounts being closed. They were being denied credit. Whatever it is that was happening in countries where they lived, most of them not living in low tax countries. I know people who live in Switzerland, who live in Australia, who live in the UK, who have had a hard time because they're Americans and because the US rolled out FATCA. Now, did FATCA catch a couple of people who were not reporting their foreign bank accounts the way they should have been? It did. Did it catch nearly as many as they thought it would? No. What it did do is sweep up in a net a lot of people who are normal everyday people, who are paying taxes in the country where they live, who have jobs, who are simply living overseas, and they happen to have been born in the U.S. before leaving. In many cases, they're dual citizens, but having that scarlet letter of a U.S. passport means all these reporting requirements under the guise of catching some tax dodgers. So often, we really don't see the volume that the politicians promise in terms of bringing in money, but boy, does it sound good as a way to shore up an infrastructure package that both sides of the aisle desperately want to pass. They need a win, and they're willing to take over $500 million of an already bloated debt, tack that on the top of the debt, to go out and make what politicians call investments. Like how they always call it, we're investing in our country. Somehow I go to the UAE, I go to Malaysia, I go to countries all around the world. I drive on some of the best roads, better than anywhere I grew up in Ohio. These roads are pristine, and somehow they're not bleeding people for tax dollars in these countries. Somehow it is possible. It makes you wonder why the U.S., with its huge debt, with its huge amount of money that's spending on these things, can't do a better job if they really are such an innovative country. But they're not, and so crypto investors, crypto traders are now going to be in the crosshairs. There are 14 new pay-fors in the bill, all kinds of giveaways, including stuff for COVID, all sorts of things that this bill is going to pay for. And what's going to basically happen is, if you're in crypto, a lot of your information is going to be shared. You're going to have a higher burden in terms of filing taxes, the same way that Americans overseas, or just Americans who have a Plan B, had a higher burden. And, it's not so bad to file a form once in a while. It's not the end of the world. You certainly do get a little scared sometimes that you're not putting the wrong number in the wrong place and they're not going to come after you. But there's going to be a lot of things to figure out. And it's a move that further takes away people's privacy, further assumes that anyone who's become successful, whether it's running a business or now who took a risk investing in crypto assets and has done very well, they must be a bad person. That is the narrative in the U.S. And so my suggestion, as always, is you want to be prepared. If I'm an American and I plan on remaining an American, I'm going to take a look at, can I move to Puerto Rico? If I am interested in seeing the world and being a global citizen, living the full nomad capitalist lifestyle, what I'm going to do is I'm going to have a second passport. And I'm going to do it quickly, by the way. Not a lot of crypto people are calling me and saying, I want the 3-year plan just to save some money. I want the 5-year plan. I want the 10-year plan. People are saying, can I get it done in 3 months? So the answer is probably not. By the time you gather all your paperwork and you file and you get approved for any type of program, whether by investment or otherwise, you're going to be waiting 6, 7, 8 months, something like that. But you want to start those 6, 7, 8 months, or whatever the timeline is, to getting your second passport, because this is just the latest salvo. And what I always say is, people say, I'll take action, I'll leave, I'll do something when it gets bad enough. There's just going to be more of this kind of news. I don't care if Wyoming comes out and says something nice, or passes a bill, or the mayor of Miami wants to collect fees in Bitcoin. The federal government of the United States that sets policy for the entire country is looking to pay for bills by putting new taxes, new reporting requirements on crypto. And this is not, again, businesses, I'd rather be a non-US business owner than a US business owner if I'm living overseas. But at least businesses have a good amount of flexibility in terms of how they're taxed. And there's already a framework for reporting. If I'm in crypto, this to me is only going to get worse. So I'm going to work on my second passport. I'm going to start either exploring the world. I'm going to perhaps start, putting together a hit list of places. There are an increasing number of countries right now that are open, the kind of countries where they are not going to pull this same legacy brand stuff. Not the Canadas, not the UKs, not the Australias. You don't want to go to those places. But places that will leave you alone are increasingly open. And I'm going to perhaps go and spend a month or a couple of weeks or a couple of months in each of those places and figure out where I may want to live while I'm working on my second passport, and seeing, is there a place overseas where I wouldn't mind moving, where I can eventually push the button. And if the US is going to make my life miserable, if they're going to take more of my crypto money, if they're going to make me fill out endless forms, if they're going to regulate it into the ground, where crypto investors already can't invest in numerous opportunities because even they don't want Americans, is that going to become worse? I'm going to have a button ready to push if that time comes. I'm going to have my second passport. I'm going to be comfortable living overseas. I'm going to have some overseas infrastructure, whether it's crypto-friendly banks, whatever it is. That's what I want to get ready right now. If I'm looking at this infrastructure bill, because this is the kind of stuff we've always said. They always throw it into some unrelated bill. We need to, revoke your passport because you didn't pay your taxes. Throw that in an infrastructure bill. The last one they passed 5 years ago. Somehow the whole place is still crumbling, right? FATCA, all this stuff gets thrown into unrelated bills. They're doing it again, and so I would be prepared. So people ask, Andrew, how do I get the most out of Nomad Capitalist? How do I begin my Nomad Capitalist journey? The first thing people do is they start right where you're at. They watch YouTube, they listen to podcasts, they read articles at nomadcapitalist.com. We've spent years creating thousands of pieces of free content so that you can get the vibe from someone who's actually done this, from someone who's actually been in your shoes. What they'll do next, they'll get a copy of the book. You can find it on Amazon. It costs a few bucks, and while it's not going to give you all the secrets, it's going to, again, give you more of the vibe. You're going to learn a lot of the things that I've learned. You're going to learn some strategies you can employ, and you're going to get a lot further in your journey. From there, if you are the 7 or 8 figure entrepreneur investor, you can go to nomadcapitalist.com. You can click Become a Client. We're pretty busy these days, but we have availability to help a limited number of people who want to create a holistic plan, something that I think is so important. So if you want to do that, go to nomadcapitalist.com. Click Become a Client, learn more about how it works and how we can help you.